We've got two gentlemen joining us right now to tell us more. Swarup Mohanty is CEO at Mirae Asset Management. And we have Manoj Nagpal, Managing Director and CEO at Outlook Asia Capital. Gentlemen, great to have both of you here. Thank you very much for your time. Swarup, if I can start by asking you to comment on exactly that data. Net outflows from equity schemes widening significantly in August over July.
Yeah, thank you so much for having me. But yeah, I think you're right. What has happened is over the last 2-3 months in particular, there is one segment of the market which is not believing in the long-termness or is taking a short-term call on the levels of the market. And that's natural because when you look at the data points surrounding you and the market having a very significant short-term run-up, some part of the market will believe that it's time to get out, and that's what is happening. So if you look at the broad numbers of equity in particular, the gross purchase of around 25 to 27,000 crores per month is intact. What has happened, and that's what is playing out, is that the redemptions have gone up. And we are being saved by the large SIP book, which continues to rise month on month. So here's the thing, the investor is behaving very differently when it comes to investing through the SIP route and is just behaving the other way when it comes to investing in the lump sum route, and that is playing out.
Okay. Manoj Nagpal is also with us. Manoj, that's the basic question, right? Why are equity flows falling at a time when the markets are outperforming, especially outperforming global markets in a big way? What do you think is spooking investors?
Sonia, the way I look at it is that, the Indian investor, especially the younger lot who's joining the mutual fund industry, is a very educated or a little more financially literate kind of a investor. So if you see the trend over the last 3 years, whether it was March 2020 when the markets fell, and that was one of the months where a lot of money flew into equity schemes. And as the market started rising, and whenever there is a rally, they are taking profits off the table and putting it back into the markets through the SIP route. So that is one of the reasons you are seeing the SIP book building up consistently. So for example, 3 years back, if you had gone, the SIP book was around 7,000 to 8,000 crores a month. Today, it is between 12 to 13,000 crores a month. So that's a 50% increase in the SIP book. And that's a very good long-term trend, from the investor perspective, because they are committing for the long term, they are committing month on month in a disciplined manner, and taking off profits off the table when they feel uncomfortable of the levels of the market. So I think those are the two big trends that are, actually building the industry for a better long-term run.
Okay, that point I get, that the SIP culture is improving, and that's always a good thing. But my question was more overall, why are the flows slipping? And Swarup, I wanted to get you in on this. Within equities also, if you look at it, the bulk of the flows that are coming in are due to NFOs. So the question is the same money being churned in the market?
Yeah, one will suspect that some amount of it would be going into NFOs, but out of the 27,000 crores of gross, say 12,500 crores is, say, SIP, and the NFOs are just 3,000 crores. So it's not a significant amount yet. But just to answer your question, there are different types of investors in the market, and there should be different types of investor for the market to function. Actually, when there is a seller in the market, there should be a buyer, and that's how the market functions. So at some point of time, people will take a call, and there was enough money, like Manoj pointed out, which had come in at the past. And if the market sees a significant short-term run-up, this is how some investors behave, and it's not a new pattern which is emerging at this moment.
Yeah, Swarup, just to prod on that point, which you first said, they're behaving differently. The discretionary lump sum they seem to be going out. There seem to be outflows there, but SIP investors are coming in. There was also the fact that new account openings have risen. I think the size of SIPs have also are becoming smaller. I mean, actually, they may be also a good thing, perhaps, for the long run, because they may be more stickier. But could one also interpret this as some of the more seasoned investors booking out, whereas a new crop is coming in? Is that could that also be true?
difficult to sort of pinpoint which part is going out. But there's no doubt or debate that the penetration is growing. Today on the PAN card, our penetration is around 8%, which was some 4% 2-3 years ago, which Manoj was talking about. Just look at the SIP book from 7,000 to 12,500. And it's a fact that the demography of India is playing out in this market as we speak. The young have started investing, and the young, it's good to say that, they're investing with a plan. And when they invest, the SIPs, they go to behavior. Hence, there is a lot of shift towards the investing through the SIP route, which augurs very well for participation in the market and staying put in the market. And that's what creates wealth over a period of time. So that is happening as we speak. But some part, irrespective of age, will be in this category, which will look at short-term targets or markets or whichever way. And again, I repeat on the fact that the market had not run up in such a short-term manner, 20% off almost in last 2-3 months, we wouldn't have seen this behavior. Prior to that, they were staying put is a reality.
Okay. Manoj, I wanted your thoughts on, within the funds, hybrid funds have seen outflows, particularly arbitrage funds. Why is that?
Yeah, so there are, arbitrage is more of a parking place, for short-term investment. So people typically tend to invest there just to, as an alternative to debt rather than actually in a hybrid fund. So that's one. That is a category which is, sees large outflows and large inflows over a short period of times, depending on what is the spread on the futures and options, and the underlying cash. So spreads have been shrinking. So if you really see the spreads in this segment have come down to around 0.3% on a monthly basis, which is not really lucrative given where the GSEC yields are currently. And that is one of the reasons there is profit booking happening from the arbitrage fund and going over to traditional debt. But Sonia, one of the other big trends I would like to highlight to you within the hybrid category is the dynamic asset allocation funds, or which are popularly known as balanced advantage funds. Now, that is a category that has become the largest category across the equity space and the hybrid space. So it's almost now 2 lakh crores. Now, this is a category which investors are using as a quasi-equity to enter into the markets and letting the fund manager decide how much to allocate into equity. Now, considering that the size of this category, the balanced advantage funds, has become almost 2 lakh crores, out of which around 40% is invested into equity. So around 75 to 80,000 crores is invested into equities. And the bulk of the balance, 1,20,000 crores, which is currently in this category, is waiting to be deployed in a staggered manner over a period of time. So that is one pool of money that is lying with the mutual funds, which will buy every dip. And that is one of the reasons, mutual funds today, you see, turn a big buyer whenever there is a significant dip that's going on. So that is one trend that is outside the flows, but contributes to the, buying in month-on-month basis into the equity markets, which people tend to miss out, as a section to look at.
All right. It's great speaking with both of you. Swarup and Manoj, appreciate you joining in on the program. Thank you very much for some of those insights right now today.